Good evening. I'm your host, Crypto, every single day. I haven't even missed a single day daily. Our top story tonight. The worldwide economy is in a great, giant bubble. I know, I was just as shocked to hear about it as you are. Smoking cigarettes is considered bad for your health. Slapping a baby is not considered polite behavior. And water, when touched, may give the sensation of wetness. I just thought I'd address that before the inevitable comment or two saying, well, duh, Crypto, every single damn, haven't even... Of course the economy is a bubble. That is why you must buy Bitcoin. Diamond, the true protocol of the power of the blockchain on the Bitcoin protocol. Damn, how long is this message? Send. But in all seriousness, the talk of bubbles is very high right now. There's a growing worried sentiment regarding the sustainability of not just Bitcoin's valuation, but the entire economy. Fueled by, stock market crash. Stock market crash. One simple trick to eliminate diabetes. Stock market crash. It's not like they've not been saying this ever since the last stock market crash, but a particular note of interest now to bears is, once the pandemic is over and the printer eventually stops going brr, are we going to finally feel the painful side effects of digitally printing nearly 20 trillion in stimulus? But why should I be discussing this? What happens to the global economy may or may not even affect crypto. Maybe a crash would maybe even be good for Bitcoin in the future. That's entirely possible. I'll explain later on how, but in the short term, it's unlikely. The March crash is the most obvious example, but ever since 2017, there has been some level of positive correlation with at least the economy in the US. So today we will be looking at stuff we don't like to look at, but must. How likely is an economic crash? What are people concerned about right now? How does this affect Bitcoin? And what I personally am going to be doing as a result. As a quick reminder, for a limited time only, get yourself $250 bonus depending on your deposit amount using my referral link down below and earn yourself some interest on your crypto. Any help or questions you have, shoot me a message on Twitter. DMs are open. First, it's important to realize that economies around the world have changed this past year quite drastically in their response to the pandemic. Jerome Powell of the Fed even saying, quote, "We crossed a lot of red lines that had not been crossed before." He's not kidding. First knee-jerk reaction was to slash interest rates, but when that wasn't enough, they took on unprecedented and aggressive measures, such as the issuance of emergency loan programs, funneling credit to state and local governments, buying corporate debt, record bond purchases, and more. It's fine for the government to manipulate markets, but the people themselves? Now we must halt trading. As an aside, I love what's happening with that, by the way. A fun-loving, anarchist, decentralized community weaponizing memes to take on the big suits that they perceive to have long abused their power and costing them billions in the process. It's the most non-crypto thing I've ever seen. Trading's paused for you. You can long and short GameStop stock over on FTX, by the way. No doubt there's going to be some pretty strong volatility on that very soon. Anyway, what this manipulation has meant in practical terms for the rest of us is soaring asset prices. From the stock market being a sliver away from all-time highs, the housing market continuing to balloon, the crypto markets too, in case you didn't notice, but also the Pokemon card market. That one stings because I'm pretty sure I had a shiny Charizard myself back in the day. Oh well. But bubbles are forming and getting faster in their formation. To showcase this, have a look at the level of investment in SPACs right now. If you don't know, SPAC is a method of not getting high, actually. It's a way of quickly getting a company onto the stock market without having to go through the traditional IPO process. Why is SPAC called SPAC, but IPOs not called IPO? IPOs too showcase the same overenthusiasm. It all reminds me of levels of investment in ICOs back in 2018. Classic bubble.
Italic, impress.
Stock prices comparative to earnings are as disconnectedly high as levels previously seen that preceded two major market crashes. Fueling a lot of this, and perhaps the most concerning bubble, is the debt bubble, growing at a rate never before seen. Margin debt for the total economy is difficult to track. Some of it is undisclosed, but the trend is clear. What we're looking at here is the performance of the S&P 500 in blue, and total disclosed margin debt flipped in red upside down. So the lower the red line is, the higher the debt levels are. it's pretty scary once you notice it. It does make sense why financial institutions are doing this. Why shouldn't they try and leverage whatever they can to put even more capital into assets that are all, to be frank, manipulated by the government to only go up in value right now? Even Michael Saylor, the man who can do no wrong, issued $650 million in company debt to buy 29,000 more Bitcoin at $22,000 per. Fantastic investment move, already a crazy return. He almost certainly isn't the only institution to have taken on debts to buy Bitcoin with, and for sure won't be the last. In fact, the Batman of Bitcoin is sharing his playbook to more of them. We're going to have thousands of executives, officers, and directors and advisors of corporations coming together in the first week of February, and they all want to figure out how to plug Bitcoin into their balance sheet, their P&L. We're going to publish our playbook. I think this is actually amazing, but it's important to realize what this truly means. The more Bitcoin is adopted by the traditional finance world, the more it will become intertwined and behave like traditional finance. That means the bull runs, yes, but it also means the rising levels of leveraged debt fueling it. For me, I don't really see any alternative here though. This was always going to be the next step to take, and there's more steps to take after this for Bitcoin. So there's going to be more positives than negatives, I feel, so I don't really have a problem with it. But it's pretty obvious why people are concerned right now. Debt reached record levels before the last two market crashes, but if the problem isn't immediately obvious with this already, if you were to actually trust this indicator, try and trade off of it, you would have been shorting the market since 2013, and you would have gotten completely wrecked. Apparently this doesn't work anymore, or we're in the mother of all bubbles. Let's look at another indicator. Often considered the indicator to pay attention to, the bond yield curve. So good, I will let Investopedia explain it. If you invest in stocks, you should keep an eye on the bond market. If you invest in real estate, you should keep an eye on the bond market. If you invest in bonds or bond ETFs, you should keep an eye on. If you breathe, you should definitely. The bond market is a great predictor of inflation and the direction of the economy, both of which directly affect the prices of everything from stocks and real estate to household appliances and food. Okay, it's great. So without further ado, here it is. Back in the year 2000, rates got extremely low. Probability of recession very high, predicting the market sell-off. So far, so good. Back in 2007, rates got extremely low. Probability of a recession was very high, predicting again the market sell-off. July 2019, almost as low as it has been previously, no market sell-off. Interesting. It was like a house of cards or a set of dominoes that just didn't fall. It's almost as if things have changed. As if the world is not anymore the way it used to be. No. All this reminds me of a myth about bumblebees. That's not going to seem so random in just a sec. According to all known laws of aviation, there is no way that a bee should be able to fly. The myth dates back to the 1930s when the French entomologist Auguste Magnin noted that a bee's flight should be impossible because of the haphazard way their wings flapped around. So imagine being August stating factually that this thing cannot fly, all the while it's buzzing around your head. Same thing with bears. At what point do they decide to just go back into hibernation? Because for all their supposed Austrian school of economic wit, they've been wildly outperformed by TikTok teenagers.
So last night I bought 178,000 Dogecoins. So if y'all buy it and it goes to $1, I'm about to buy Brick That Robot, dog. You believe that?
Yeah, I don't know what he said either. But it does beg the question, is this sustainable? I guess we're all finding out, but there is one thing we can quantify and keep a wary eye on, and that is inflation. Despite the printers digitally churning out a tremendous amount of money, it isn't circulating in the economy yet. It is mostly parked in investments like bonds and not moving. It's gotten to the point now where Bitcoin being a hedge against inflation is true, but actually one of the weaker arguments to make about why Bitcoin is valuable so far. Best way to demonstrate this is by looking at the velocity of money. In case you're unfamiliar with it, it's actually a fairly simple concept. It is the number of times $1 is spent to buy goods and services per unit of time. It's been falling dramatically ever since 2008, but maybe even before that, for the last 25 years almost. Now it's as low as only 2 previous times in recorded history. This is 200 years of it. There are multiple reasons for this. Most obvious one lately is the fact that we've been in a pandemic where people have spent less on going out to restaurants and movies, but I think that misses the big picture. Most money in the world is owned by a few amount of people, and increasingly so. Obviously, they don't spend close to as much as they earn, and I think this is reflected in the falling velocity of money. But regardless, what we want to know now is, will the velocity of money now start to pick up as we exit the pandemic? Will it lead to inflation, and will it be controllable? A little and consistent amount of inflation is considered good. It's meant to encourage spending. Too high though, and it can have the opposite effect. If inflation gets too high, things can start to cost prohibitively more, which if left unchecked can lead to businesses being unable to turn a profit anymore and go bankrupt, increasing unemployment, all of which is obviously bad for the economy. The Fed would typically step in and attempt to reduce the money supply by upping interest rates on it. What makes this a whole lot worse, though, is its relationship to debt. The financial institutions who took on this leveraged debt need one of 2 things to not get into trouble. 1, assets need to continue to rise in value, or failing that, interest rates on loans, new ones, need to remain low so that they can issue new debt to pay off older. It's just like a Ponzi scheme, but as long as they have debt that is considered good debt, option 2 is still viable. Things like taking a loan out against property, as long as the property is genuinely valuable, totally fine. Debt isn't a problem. But we've been here before. And last time, that's exactly what they didn't do. The match that lit the fuse on the 2008 financial crisis was in large part CDOs, the very definition of bad debt. If you're curious, this scene from The Big Short is where the protagonist meets a CDO manager and learns what they truly are.
I actually feel pretty sick.
So the big financial institutions in 2007 had huge balance sheets inflated by taking on huge amounts of debt, most of which was backed by actual garbage. And when the market took a downturn and it came time to pay up, they couldn't and would have gone bust. The taxpayer, you and me, had to front the bill for them. How much of these debt levels now are good debt? They say the only guarantees in life are death and taxes. I'd extend that to also be that you can assume most people will be motivated by and act according to what is in their best interests, which can lead to greed.
Greed, for lack of a better word, is good.
So the rational thinker in me has to believe there is a rising amount of bad debt amongst this because some are inherently greedy, although we don't know how much. Honestly though, while this seems all doom and gloom, this could still even easily continue for many years to come. The Fed has been so aggressive propping up assets, they are essentially one step away from openly buying S&P 500 stock on the open market. Some even think that this is an inevitability. If that happens, well, just toss out everything I just said about inflation. It may not matter at all, like apparently the flattening of the yield curve and debt levels no longer seem to matter. You could then say that hyperinflation would then be an inevitability and that always ends badly, but we're getting so deep into hypothetical territory now that I personally mentally check out at this point because no one can say anything for a certainty. We've never seen the world's reserve currency potentially have this issue in recent history. So, in summation then, the surprising truth is we are in a bubble so large that several recessions could have theoretically occurred by now, but despite it being so big, no one really knows how long this can go on for. The size of it does nothing to tell us when it would pop. Inflation is the big concern because of how it threatens the debt markets. Will it start to rise now or not? And how the Fed will choose to respond to it are the economy's biggest of questions. So what would I be doing with my money? Absolutely more of the same. While a hedge against inflation hasn't been all that important in an almost deflationary economy, it could become a lot more important in the not too distant future as the velocity of money looks set to rise. I will personally have most of my net worth in crypto because I'm in a position where I can. Buying goods and services that I need using my Crypto.com crypto card because I don't want to sell my crypto. If you don't have one, you can get one for free and even $1 bonus using my link down below. But honestly, what else would I even do with my own money? I own my own home, I own my own car, so what would I do with the rest? Sell for fiat, gold, bonds? That's the big elephant in the room. GME stock, that really isn't an attractive proposition to me long term. Not to mention the fact that while Bitcoin is still an experiment, if it would be a world's reserve asset, it would mitigate almost all of these issues. It seems so obvious we'd have issues trying to balance an asset backed by nothing, except for nuclear weapons, I suppose. In fact, this is the whole thesis around the trail of thought known as hyper-Bitcoinization, where Bitcoin backs up the entire financial world, so absolutely for me, more of the same. So, those are my thoughts about it. Am I right or wrong? Let me know your thoughts. A like is always appreciated, and I'll see you in the next one.